Good morning, friends and traders. Welcome to the Market Forecast. I'm Dan Hodgman. It is Wednesday, September 9th. And I want to give a quick little shout out to the man, the myth, the legend, John Hoagland. It is his birthday. He is actually in the office here today, so I'm filling in for him here on the forecast, but we all want to wish him a happy birthday. I'll make sure to pass any wishes on to him when I talk to him after the forecast here this morning. I hope you guys are all having a good week. We are in some volatile times. Markets are very hectic. They're very chaotic. They are leading to some difficult trade. I'm seeing already a couple guys posting in here talking about how they've kind of gotten pushed around a little bit yesterday. And I totally get it. These are tough. The one thing I cannot stress, you hear us talk a lot of times about how to get in on trend. If we're trending higher, you're looking for those weakness points. If we're trending lower, you're looking for those bits of strength. The only way to find those weaknesses and strengths is a lot of chart time, a lot of computer time sitting here watching what's going on to kind of get a feel for when those pullbacks are starting to slow up, and that's kind of going to give you that best chance for entry. So start replaying through these markets. Start looking back. Start watching how these things are reacting, and see where, if you were going to trade this thing in hindsight, where would you have gotten in? And lastly, do not ever try to pick tops and bottoms. I've been seeing it a lot lately where markets are picking directions, going in those directions, and traders are trying to pick a top or a bottom, and it just doesn't work. We're going to get run over. None of us are big enough to step in front of this steamroller of a market that these things have been. Therefore, our job is to just go with the market, go with that trend. We're going to have a better opportunity. Probabilities are going to be higher that we're going to make money, and our risk can always be a little bit tighter when we're going with trend, and our reward tends to be a little bit bigger. So just something I wanted to touch on. All right, at this point, NASDAQ is starting to recover, but down almost 10% from its highs. S&P 7% from its highs in the last few days. We've got crude oil inventories. Don't forget, those are not today like normal on Wednesday. They have pushed to tomorrow morning, crude oil inventories. So don't forget about that one. 6 of the biggest tech stocks down $1 trillion over the last couple of days. That's Amazon, Apple, Alphabet, Tesla, Facebook, and gosh, I'm having a brain fart here. Microsoft. Duh. All right, so big sell-offs are happening on there, but we are starting to show a little bit of light right now. And you got to keep in mind, these equities, dude, they need to sell off every so often. I'm not sitting here thinking that we're turning into this huge bear market and the sell-off is going to continue. I'm accepting the fact that we are going to start to hit volatility. Volatility is going to be strong here over the next couple months because we are going into elections. We're less than 2 months away. These are some of the biggest elections we're probably going to see. We have seen it in a very long time. So it's leading into extreme volatility. So again, just continue to be cautious. When a market picks a direction, go with that direction. All right, I digress. Let me get off my soapbox here, and let's go ahead and take a look at these markets. One sec. Get everything set up. Here we go. As always, starting with the daily in crude oil, which I don't mind where it's at right now. Not going to lie, I'm already seeing the pumps show a little bit lower of pricing, without a doubt. Strong sell-off across the board. Where are we starting to look at this thing? Well, if we start to kind of open things up, we can kind of get an idea. We're falling back into July's trading area when there was bigger concern about Corona. Now, is that the case here? I don't think that's quite the case just yet, but I think people, with summer coming to end, there's a lot going on here. You think about it, summer, Memorial Day to Labor Day, big gas time. They wanted to see these prices higher. With the fact that people are not traveling and commuting for work, And now that summer's coming to a close and we're not going to be traveling for summer, demand for oil is going to start to slip off. So when we look a little bit closer here in the 30-minute chart, what do we got going on? So like I said, the sell-off has been steady, but we finally found kind of a little bit of support right down by settlement price, which is 36.76. This market has kind of found a little bit of stability in the overnight session. Since middle of the night, since London session opened up, buyers came in, kind of picked this thing up really fast, found that consolidation from, what is this, Monday night or Tuesday morning pre-open here. Kind of fell into that consolidation. So first thing I'm looking at right now to see if this thing's going to go higher is if we can kind of break through this 37.65, 37.80 range. If we can break through this, if we can get through, we may see this thing want to start to try and recover yesterday's losses. It's going to take some work. I can't deny that. Open here did make a new high, but since then we are starting to look back. So this open's going to be pretty telling. This first little half hour for me is going to be pretty telling on direction where this thing can go. If it does go higher, I'm going to look to see it kind of close the gap towards back towards that Monday trading. If not, if this thing starts to return, settlement price is where my eyes are always going. 36. Whoa, I'm way off there, guys. That's a little better. 36.76 is settlement price. That's the first place I'm going to look to see this market break back to. So 36.76. Below that, it's going to be tough. But value area low down here at 36.28. And then if this thing just gets out of hand, I have a couple models pointing down to 34.36, which is way down there. But hey, I can't put anything out of sight here. You know, if you think back 6-8 months ago, did we think we were going to go down to negative 12? No, we didn't, but it did. So I do have models pointing out to 34.36. All right, let's go ahead and look at the S&P 500, which is up here pretty strong so far today, and we're getting pretty darn close to some prices that you guys know I love. And I'm just going to say it right now, 33.80. I know level 2 here's got that written down as well, but 33.80, guys, that was such a strong pivotal level for such a long time. I am not letting that out of my sights. I said last week, business is not done at 33.80. We are back in play. That's my price point that I'm going to be watching pretty strong here. When we look a little, and first off, before I walk away from our 30 minutes, as we kind of take a look here, going way back since the rally kind of got going, I'm not taking anything away from this. I really am not thinking that we're anywhere near a bear market. This is still bullish to me on the grand scheme of things, right? When I'm looking at this market, yeah, we had a pretty large sell-off, but just for a little perspective here, we saw a nice kind of strong sell-off a couple months ago. And when we take a look at that, and you guys know me, measured moves, I love them. How about that? That's right where this market came down to, right? So we take a look at the last time this market sold off, and then it got back on that horse. Kind of took a little bit to get going. It was stabilized for a short bit. Summer got rolling, and this market really took off. And so that's what's got me positive, optimistic here. We're going to see some volatile times over the next couple months with everything that's going to happen. But hey, this market, I'm still pretty bullish on this thing. Even though we did see a big sell-off, I'm going to still maintain that bullish attitude until I have more proof that this thing's ready to tumble. So hey, that's just something I'm looking at right now. Now, when I look at the daily chart here, gapped open last night after this market opened back up. We were gapped lower. Initial instinct, sell, sell, sell. Buyers did not like that. Buyers kind of started to pick this thing up as soon as we got going last night. This thing started to take off, and now we're starting to see some positive momentum. We have traded well within yesterday's range. We're sitting right at yesterday's value area, 33.60, and we aren't too far off from that 33.80. So to the high side, 33.80 is my point. If we get above 33.80, if you guys remember, we were also trading pretty heavily to that 95. We were checking 95 quite a bit, but rolling right back to 80. So 33.95, definitely an area to keep an eye on to the upside. Now to the bottom, downside. Weekly kickoff low is 3,300, which, hey, how about that? Came within 5 points of it last night. I'm definitely going to keep that one on my radar, but settlement price, I'm looking right now. I'm optimistic, or I'm hopeful that settlement, if this market comes back, settlement kind of creates that springboard and pushes it back up. But hey, settlement right now, 33.35. I'll watch that momentum as we approach settlement price. If it's going to blow right through, and let's just say this thing really does continue this sell-off, and that measure move means nothing, then I see stuff down at 32.68. So I just want to point that one out. So I've got 32.68. I have a lot of stuff pointing out 33.80, as you guys know. And right now, right where we're trading, 33.67 is a great little price point. So just a couple things to keep an eye on when it comes to levels. You guys know me. I'm a levels guy. I love paying attention to levels, and that's what I'm tend to be trading off of. All right, now, NASDAQ. A little bit bigger of a sell-off here in the NASDAQ compared to the S&Ps, but hey, NASDAQ had more room to sell off than the S&Ps. NASDAQ has been at highs for quite some time, right? So this thing, 10% sell-off approximately. But again, maintaining that optimism with this thing. I am not sitting here thinking we're anywhere near a bearish market. Markets have to give back. We noticed the trajectory over the last month on this market. It has gotten stronger and stronger and higher. This had to give something back, right? We talk about how markets can get overbought. People get excited about it. You were watching Tesla do astronomical things. I mean, Tesla's kind of starting to sell off a little bit. I hope none of you guys bought it on those highs of 490 or something like that. But hey, people were getting really excited about that, and we're starting to see cooler heads are starting to prevail here. Okay, we are buying these overbought stocks. We got to get out of them a little bit. Let's start to diversify now that we're going into fall. Things are adjusting. We're approaching the end of a quarter here. We've got some stuff to be thinking about as we move forward, so I can't stress it enough. This is an absolutely okay sell-off. Now, when I look a little bit closer on the 30-minute chart, what am I seeing? First off, settlement price is 11,060. 11,060. So just like the S&P's gapped lower a little bit, buyers started to come in and scoop this thing up. We had a hard time getting into yesterday's value area low right here at 128. Sold off right down to settlement price, and that was where we saw that nice springboard that I like to talk about. Settlement created a great springboard, accelerated this thing right through value area low to point of control, which is going to kind of start to be that pivotal point right now. As this thing opens up, I wouldn't be surprised to see reaction at settlement price here of 257. So we're up quite a bit so far already on the day. Market hasn't opened up just yet, but a couple things that I'll be paying attention to. To the downside, 11,000. I mean, BFRM, big fat round number, definitely something to pay attention to, but also as we looked back, action was traded right around 11,000. So if this thing comes down, I'm watching 11,000. Maybe that swing low of 935, 10,935. But for me, it's that 11,000 point that I'm going to pay attention to. Now to the upside. If this thing starts to go, value area high up here at 58, going to be a checkpoint. But I have some stuff pointing me out to just above that at 380, 11,380. So that's kind of the range I'm going to keep an eye on. Beyond that, then I got to start opening up the models a little bit here and getting more levels outside of that. I'm not expecting this huge rally here today unless some wild, great, crazy news comes out. But I'm going to expect possible good, strong buyers to come in. Bigger retail investors saying, hey, we've seen this sell-offs in a trend higher, right? What do we say? When we're trending higher, we're looking for points of weakness to buy markets. Or am I going to start to see these investors say, hey, we got points of weakness now. This is where we're looking to buy to maintain trend to the upside. So possibly bring in some stronger buyers. Next, let's look at the gold, which is kind of starting to consolidate, right? We're getting really, really tight. This thing is waiting to make some sort of directional move without a doubt. I want to adjust our weekly kickoff levels here. 2006 and 1920. All right, well, we're spot on. Okay, yep, 2006 is our weekly kickoff high and our weekly kickoff low of 1924. Weekly kickoff low of 1924 has come into checkpoints here, so we'll be keeping an eye on that price today if this thing sells off. If it doesn't break above settlement price here, which is 1943.20. Settlement price of 1943.20. That's actually the high side of the range that I'm looking at right now. I'm really kind of waiting to see if we can reject here. If we start to reject here, I'm going to flip it around, and I'm coming down to 1930, and that's the range I'm going to be watching here in gold. Simple as that. I don't know if we're going to make directional moves here, so I am range bound on this market until it tells me otherwise, as it's been saying for quite a few days now. Very tight ranges, basically settling unchanged most of these days. Next, let's look at the euro, which as well, starting to sell off a little bit here, right? Absolutely okay. We're coming off our highs just slightly. Weekly kickoff high of 120.09 with a weekly kickoff low. We'll adjust here, 120.09 and a weekly kickoff low of 117.06. So we've extended this range here. Starting to work our way lower. What are we looking at here when we look a little bit closer on the 30-minute chart? Oh, wow. Nice little pop here so far. Changes things up for me since I sat down and did my pre-market prep. I had a high side of 117.98, which is essentially pretty darn close to where we are right now. So I'll continue to kind of keep an eye on this price. If this market kind of turns around, if we turn around, I've got 117.58 to the low. That was the range that I was starting to look at. So I am still well within my range here. Looking at value area high from yesterday is essentially right where we're trading right now, 118 even. But obviously, if this thing starts to extend higher, first off, just for perspective, we have kind of maintained this downward trend. We have maintained this downward trend. This is the first time we're really making some moves above this short time frame trend. And I can tell you, this thing goes way, way back. So are we showing acceptance? Right now, it is telling me we are starting to accept a little bit above this. Where can we go from here? Well, I'd have to look at my other models, but I'm definitely going to start to look for some consolidation. So what I'm going to do here, we're going to take a look at kind of where some of this volume has been trading to see where these high volume nodes are going to be at. All right. Over the last week during this consolidation, value area high is up here at 118.42. All right. I like volume and I like time. That's an area that I'm going to start to pay attention to if this thing continues to extend higher. We've got a little value area high, and I'm looking at this area strictly because this is where the consolidation has been over the last week. For me, a lot of traders, when we start to consolidate, we are bringing in new traders. People are paying attention to certain price points, and that's what I think we're going to start to see. We're starting to see here. So paying attention to these prices. So we said point of control 118.42, value area high up here at 118.59. Value area low down here at 117.95. All right, so just kind of a range to keep an eye on if this thing continues to extend higher. Like I said, I have a point down low of 117.58. All right, lastly, let's go ahead and take a look at the euro, which, again, really not making any real trend one way or the other. If we were really to take a look at things, we're kind of seeing a little bit of a trend higher, but I'm not giving too much into this at this point. It's not a true trend. Right now, I'm actually more looking at the fact that we go, are starting to consolidate here and form a little bit of a wedge. All right. So what do we got? This market opened up last night, kind of brought the buyers in a little bit, but since then it's been a pretty steady sell-off, but we've kind of entered into a lot of consolidation. A lot of time, a lot of volume has been traded right where we're trading right now, this 94.15 approximately. Brought in a lot of consolidation. So that's kind of a price to pay attention to. Beyond that, I do have 94.10. Now, if this level starts to hold and starts to turn around for us, where can this thing go? Honestly, we got a big opportunity up here by 94.76, but it's going to take a lot to get there, right? So I'm going to start to look at yesterday's value areas and points of control. Value area low and point of control brought in a lot of price, a lot of action, a lot of traders. So this 94.34, definitely an area to keep an eye on. And from there, we're just going to continue to make those checkpoints higher. Value area high up here at 94.41. And then, like I said, if we really get going, 94.76. But I'm going to be honest with you, I think that's kind of far out there. And if this thing turns around, we're checking some swing lows down here right at 93.88, 93.90, right around there. That's kind of that area that's really going to bring my attention if this thing extends lower. All right, everybody. As always, thank you for tuning in. Let's take a look, see what comments or questions we got. First off, good morning, MMS Capital, level 2. KJ, glad to see you were patient, level 2 this morning. KJ, good afternoon from Poland, nice. Felix, Kevin, good morning. Norman, Tanya, Anthony, stomped out yesterday. Hopefully today's better. Absolutely. If yesterday is weighing on your mind too much, take the day off. Do not let yesterday affect your trade today. And if you're thinking about it, take the day off. It's absolutely okay. Missing one day is not going to be the end of the world. If anything, it's going to be best for you. Doyle, good to see you. Marco, Tanya, yes, happy B-Day, Hoag. Everybody, it is Hoag's birthday. Keith, good morning. Esteban, Sarah, Tim, good morning. Danny, hey, I like your name. Good morning. Fast West, good morning. Dan, glad I unwinded some of that Tesla position. Absolutely, good job. Glad to see you got out of that. The Can Man, Can since 1990. I like that name. Starting to pick up. Careful of bull trap index traders. Absolutely. Be careful. Be cautious out there. Troy, good morning. All right. Kevin, how do you approach the relationships between gold and the S&P and DXY? Does one market trend tend to drive the other? Do you use them as fundamental indicators as they might affect the other? Kevin, great question. So, first off, I will say next Tuesday, Coach's Playbook, we're going to be talking about correlations, and that's what we're touching on here. Now, historically, there's risk on and risk off, right? Gold and equity markets are technically, historically, inversely correlated. So, if you see equities grinding higher, you're going to see gold selling off. That's all kind of changed here over the last 6 months, give or take. As a matter of fact, I was looking at correlations yesterday, and over the 180-day, there is no correlation there. So I used to use it a lot. I used to use the bonds, gold, when looking at SPOOs, and that was kind of a correlation. I was an bond options trader, and so we paid attention to SPOOs a lot. If we saw SPOOs sell off, we were expecting bonds to go higher, and vice versa. That's not really working right now. So that's not something I'm technically paying too close attention to. I think we saw for a while, you saw equities were in a strong rally, gold in a very strong rally. In theory, they are not technically supposed to rally together. But yeah, the dollar taking a little bit of a hit. you had still fear in the world that maybe we're not going to recover from COVID. So everyone's scooping up that gold, but optimistic that equities are going higher. So, hey, I'm kind of hedged here. Take one, take the other, take both, and we're going to push this thing higher. So typically, I used to look at them as inverse correlations, but hey, that's kind of out the window right now. So I'm not even looking at a correlation between the two. Simple as that. Norman, how do you manage your time with, say, ES and the Euro at the same time? How do you pay attention to that many charts at the same time? Well, Norman, I'm going to be honest with you. I'm not trading all of them, by all means. I've been very vocal this year. I've actually been trading less and less. I've been looking for those bigger opportunities, those bigger setups. And I've actually had one of the best years I've had in a very long time because of that. So I'm executing maybe 3 to 5 times in a week. I'm not trading multiple markets. I'm watching a lot just to see what's happening to help determine my execution. I've been trading the S&Ps quite a bit, as well as silver and gold. Crude oil I've actually been kind of doing some more longer term stuff with crude oil, so not active in the day trade there. My day trade has been pretty active. Gold, S&Ps, and obviously I'm a bonds guy. You know me. I'm always watching the bonds, so I'm executing there. As far as like time, I'm keeping them all up small, watching news, keeping an eye on Twitter feeds, and kind of being cautious. I'm really just kind of waiting. I set levels for all of them, and I just watch the 3 to see if my levels are coming into play. Once I recognize that a level's getting close, I'll pull that up on another screen up here. Up here, and I'll pull it up on this screen up here. And that's where I'm starting to watch it really closely as I approach that level. Is an opportunity going to present itself? That's about how I do it. I'm watching the 3. If one approaches a level, that's my main focus until I enter the trade. Then I got my stops and targets in place. And then I bring it down on the low end of my screens down here. And I'll watch it. And if I have to adjust and bring that target lower, or if I'm extending that target out, that's what I'll do. Federico from Uruguay, good morning. Jason, good morning. And level 2 correlation broken all over the place. Bonds look spooky. Absolutely. Couldn't agree more. All right, guys. Equities are about to open. I got a little long-winded here. I hope you guys are all having a great day. So I'm going to sign on out. I'll see you back this afternoon for the market recap. Until then, stay safe. Wash your hands.